Hello and welcome to Pro Trader Strategies Market Commentary for Thursday, August the 17th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies that you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having all of that out of the way, let's get it on. A little bit of economic data. Across the pond, we got nothing really earth-shattering for all intents and purposes, but we did get retail sales came in at 0.3%, which was higher than the expected 0.2%, albeit last month's number was revised from 0.6% down to 0.3%, so that kind of makes it a little bit more of a negative, if you will. Headline number looks a little bullish, if you will, but when you get that revision, it kind of washes that out a little bit. And then here in the United States, we've got unemployment claims came in at 232,000, expected to be 240,000, so lower claims, generally a good thing. Then we went on to the Philly Fed. Manufacturing index came in at 18.9, was expected to be 18.3, so continuing those Fed manufacturing numbers being better than expected and good for the economy overall. Capacity utilization came in at 76.7, right in line with expectations. And then industrial production did pull back a little bit to 0.2%, expected to be 0.3%. The other things we got were natural gas storages came in at 53 billion cubic feet in storage and was expected to be 47 billion cubic feet a build there. Later on today, we also have Kaplan speaking, who is a FOMC Fed member. All right, that's about it for the overall data. We've got crude oil actually moving a little bit higher. When I was getting set up for this, it was back in this little trend channel, if you will. Yesterday, we broke below the 50 Fibonacci level, broke into that trend area, made it look like that's going to kind of hold it in there. We just recently pushed higher and back above this trend channel. So I thought the settlement in there would kind of allow this market to kind of trend down a little bit more, continue that lower lows, lower highs, if you will. Remember, we were looking at this as being a lower high, and we didn't get that lower low, which allowed it to bounce. Now, some technical analysis people will discount this little movement in there as still a another wave, if you will, but we still have not broken above this high, which is key to kind of move over into a more bullish sentiment, if you will. We also still have the 200-day moving average below the the 50-day moving average below the 200-day moving average, and that signals bearishness. So I thought we were going to get back down here, so we still have that yet to be seen. Yesterday's sell-off was a little bit odd with that major build we saw in crude oil, and the market really kind of sloughed it off and sold down dramatically. Usually I was expecting, had I been trading it, I probably would have been trading to the bullish side and gotten run over. Maybe that's what the algos wanted, I guess, or we're taking advantage of that. I don't know. But at the end of the day, big sell-off yesterday with a big build. So on to gold futures. Gold futures in positive territory by about $6. It looks like it's in negative territory, but remember that is also having to do with the overnight session where we opened up. And this area of resistance right here at 1300, let's call it. That's not the exact number, but you can see that when the market gets up to that 1300 level, that's where it really starts losing its steam. And again today, kind of pushing up against that, but not able to get anywhere really close to it, despite the fact that we're seeing across the board more equity bearishness in the markets today. And we'll talk about that here in a minute. But gold futures pushing higher as it's kind of a flight to quality. We also have the bonds up on the day by only about 6 points. You know, these bonds don't have a whole lot of wiggle room to the upside because the Fed has said that they are happy where rates are, which means they can't really go up or down because there's just going to be no Fed action. And despite the fact that you want to throw your money towards bonds, you know, the idea being bonds go up when interest rates go down. The likelihood that interest rates are actually really going to go down are few and far between at this point anyway. Economic data's kind of showing that the economy is doing okay. We also have really low inflation. That doesn't spark the idea of increasing interest rates because of inflation being so low, and we're not seeing the robustness in the economy to get interest rates to increase, and we're not seeing any reason for them to lower them. So they're really right there in a sweet spot where you know, they've kind of done what they needed to do, and the market's reacting appropriately. All right, looks like bonds just went slightly in negative territory as we were speaking there. Dow Jones Industrial Average off its lows was just down over 100 points just a few seconds ago when I got ready to go into this. It's still down over 90 points and just a bit of bearishness in the market. We'll see that more showing up in NASDAQ. As you can see, NASDAQ having one of the biggest sell-offs, despite it's not down quite a point anymore, but it was down over a percentage point earlier today, or you know, really just even a few minutes ago, to be quite honest. E-mini S&P's down only about 0.5%, 12 points, let's call it. Came down and tested the 50-day moving average and bounced off of it quite nicely. I'm sure the bears were really trying to push below that, and the bulls really defending that area, as you can see there. And we could easily see it want to fill in some of this volume node if we hang out here much longer. Usually you'll see it kind of fly through it, but this 50-day moving average lining up with that low volume node could lead one to believe that we're going to see this fill in and create a nice area of blue here, for lack of a better way to describe that. All right, on to the 30-minute chart. You can see right out of the gates in the morning, overall markets just really started coming off quite dramatically. We're getting a bit of a bounce right now, so you have to be seen if it's really a dead cat bounce or if we're just going to kind of pause here for a little bit. But right now, the Dow, NASDAQ, and E-mini S&Ps relatively close to their lows, but in this bar, as you can see, the last 30-minute bar here has made that bounce. So overall, market's recovering a little bit. The VIX, which is the volatility indicator for the equities. As you can see, when we were getting that big sell-off, VIX did spike, but now that we're starting to see a bit of a rebound in the equities here in the last 30 minutes, we're seeing the VIX come off quite a bit. So I was going to show that because when I was getting set up for this, VIX was really starting to spike. So it's looking like it's ebbing away a little bit. All right, on to a few trades that I'm going to be looking at for earnings. Applied Material, which is ticker symbol AMAT, is one that I usually like to play. Usually stays within the market maker move, which is one of those reasons why I like to do it, and you get that volatility crush. As you can see, it's got really high implied volatility. They're coming out with their earnings after today's close, so I'm going to be entering those trades sometime in the afternoon for Applied Material. So follow me on Twitter because that's where I'm going to be tweeting this out, just like I did with the earnings trade I did yesterday. Deere, another one that I'm going to be looking at for earnings. As you can see, they have high implied volatility as well, and probably going to play this one to the upside. They've been doing pretty well, and probably going to play Deere to the upside as well. All right, so despite the fact that they're off on the day. All right, NetApp is one of the ones that I finally ended up going with. If you remember, I was looking at a couple of the other ones, Cisco and Walmart. Didn't play around with either of those. Ended up going with NetApp, despite the fact that I really didn't have much of a clue as to what NetApp really does. But for your information. Basically, they're one of the leaders in data insight and data environments, cloud environments, things of that nature. So they're one of the big dogs in there with the cloud environments, I guess, if you will. And played them to the upside when I kind of learned about what they were doing. The cloud space has really been doing well. IBM has been doing fantastic with that cloud space. So I played them to the upside. They did beat on earnings, but despite that fact, they did start selling off. One thing that I preach to all of you guys is cover these trades on the open. First 15 or so minutes. As you can see, the market did open up right here at around 40, which was testing my 40 puts, but the market really started rallying right afterwards. As a matter of fact, even overnight, it was pretty much unchanged on that. And then we came in the morning and the market kind of slammed down, but it got a bit of a bounce and was able to get out while I was trying to get my orders filled. So that worked out pretty good. And in those, I did the August 40 puts in there and originally sold them for 46 cents, was able to buy them back for 23. Had to chase them a little bit as the market really started coming off, but was able to get out of those. It's probably pretty close to just first blush right now. It looks like they're probably close to like about a 50 or 60 cent level. So that would be a loser if I would still have those on. Now, on to Philip Morris. Philip Morris has been a thorn in my side the past couple of days. Been beating myself up a little bit about it. Happens to the best of us. I was really close to 50% of my max profit on that, with squeezing a couple of pennies out of it, trying to squeeze a couple pennies out of it. And it goes back to my old adage: do you want the penny or do you want the trade? Well, clearly I wanted the penny in this instance. Wasn't able to give up a nickel edge in order to get out, or give up a bit of a nickel to get out of that, which I probably could have. And it has sparked me to put up a sticky note that basically stick to your rules. The thing with that is it wasn't really at 50% of my max profit. It was very close, but it happened so quickly that I should have jumped out of that. Anytime you get that much profit in a very short period of time, I have other rules that I didn't write down there, but a percentage of profit within a certain number of days, and I was very, very close to that 50% of max profit and did not do anything about it. So I'm kicking myself on that one. It's still a profitable trade, don't get me wrong. I'm not losing money on that trade in my margin account. It's down about $1 in my IRA, but at the end of the day, it was a nice profit in there, and I didn't do that. So it happens to the best of us. Sometimes we break away from that. I've been having a great year, and I let that one kind of squeeze out, and I just needed to settle myself down, remind myself, listen, the reason why you got here was because you stuck to those rules. So that's what I'm trying to convey here is, I kind of let that slide a little bit for a couple of pennies, and that's what happens to us. So it's a perfect example of what can happen when you don't stick to those rules and kind of slough it off. So I will now stick to my rules. All right, so stick to what got you here, right? All right, so that's all I got. Just wanted to explain to you guys a lot of those times. If we don't write that down, I had mine written down where I needed to get out, but I was working it for a couple extra pennies, and look what happens. That's exactly why we stick to those rules. All right, that's all I got for you guys, other than Friday's webinar is going to be a really good one. It's going to be on the long diagonal spread. I'm going to show you how to try and finance some of that extrinsic value with those long calls. And it's a great setup for earnings, because as you can see, when you head into earnings, you get nice volatility rallies going into that. So what we're going to be doing is selling near-term volatility and exploiting it in the further duration where that volatility starts expanding. And I'll show you how to do that on Friday, tomorrow. Go to ProTraderStrategies.com, sign up for that. All right? If you can't take that, take it easy.